Hey guys, Greg here. Tonight I wanted to do something a little bit different and record my process of when I'm marking up the charts for the winning characteristics. Tonight we have Upstart or UPST. Obviously, everyone knows how strong of a stock this is, but I felt like it might be pretty instructive if I could kind of go through and articulate what I'm seeing during my actual markup process. So, first, which we've talked about in other videos, I'll just go through the price action and kind of just highlight things I see throughout the chart. So I've already done a little bit, but I feel like I could just go over it really quickly and then we could, you know, pick up right where I started the recording. But first and foremost, I look at this earnings run up automatically, or not earnings, IPO run up, fade, and then smasher from 36 to 105. So we know the stock can run. That was apparent from the second it IPO'd. We also saw massive volume at IPO, which is something I've been trying to harp on. 13.45 million shares IPO day, follow up with 7 and 7. And then the next couple days we get over a million, kind of dry up at the lows. Classic, we've seen that. And then, volume increase. So we know the character of the stock, it can run. But this day, the highest volume ever on the first earnings since IPO is massive. So this tells you, 21 million shares transacted at, between 80 and 100, let's say, 120. I mean, that's just massive, massive amounts of money coming into the name. So again, we know it can run, and what it creates with this highest volume ever characteristic, which is a massive winning characteristic, is the HVC of 115.09. So if tracking this name and understanding the HVC concept, you could have gotten long through that point with the stop at the day's low. You're looking at a pretty wide risk amount, so you might have to tighten it up. But you get a 43% gain in literally 2 sessions. So, we know this thing can move. And since it's so young, it's probably prone to giving back how much the gain, so it does that. And then we kind of get this super choppy basing period, and everyone's looking at it and trying to get long because they saw all this power. But, this all sputtered out, and then we get huge tightness after, I think this was a lockup expiration. But we get tightness back into the stock, which is what we know winning stocks do. They get tight because there are institutions that have been holding the name and, slowly accumulating and supporting stock. So we get this large character change from this action, and so this next earnings, of course, we're expecting, if it's good, something like this. And that's what we get, plus 26% on the day. Creates an HVC of 171.2. You get long, and the low here is 166. So our risk is even smaller now. We're looking at like a 5%, maybe a little bit less on the initial entry day here. But it immediately follows through. You never take heat on the position at all, and it literally acts like the most monster stock possible. It holds the 10-day moving average and 200 as it kind of consolidates sideways here. It holds the 10-day moving average again after consolidating for 5 sessions. And then finally we get a character change here as it closes below the 10-day, so we might be thinking, longer basing periods in store. But usually, I'm also starting to study this too. There's a 21-day, or this is a 23 EMA, but the 21 EMA or the 23 EMA, they're kind of the same. The idea is that the first pullback is usually a buyable event once it reverses up. So it has to show you that it can hold this weakness down here, but we get a close right on it, close above it, and then it smashes. Another interesting thing that, just going through this I see right now is these tight days that it has before it decides to go higher. And like we talked about in this area, it's a institutional footprint to get tight there, or not there, but tight in general, and then blast off, because again, it's being held institutionally and demand is being brought to market in a way that's going to absorb supply, but not enough to really push it up and out yet. But once that supply is absorbed, you get stuff like this. You get double tightness right above 300, 304 lows, 305 lows, And this is also a market weakness, you know. So then we get it. It makes sense for this thing to just go once, you know, even just a little bit, not even above average demand comes in. And then obviously today's volume was nuts. But yeah, again, so kind of to go back to the relative strength we're looking at here, there's periods of outperformance. And then from this earnings day, just an absolute monster. Then we have relative strength new high before price here, which was on the 12th of October, which was the tell, you know, that this was going to happen today. So if you didn't get long this day or, you know, any of the previous days, which I didn't personally, I kind of traded in and out of it, but, you know, this is a huge tell that this could happen if the market turned up higher. Moving on, down to volume that's going to accompany all this demand or supply, honestly. We see a lot of accumulation volume throughout this run-up, expected because, you know, it's gone from 170 to 350, now 380 in only a matter of 3 months, I guess. So just massive, massive demand. This is going to be highest volume since the March earnings, which is also another winning characteristic. We want to look at how price responds to earnings reactions, because that's when institutions can analyze whether they need to increase, decrease, or continue their position. And obviously, you know, you're going to get a directional movement usually. So again, we see this highest volume since March earnings, winning characteristic, boom, follow through volume for 2 days, another winning characteristic. So again, when we see these traits in a stock, you know, they're going to add to our conviction. So hopefully, you know, if you catch this HVC, you've sized it pretty good, because you see you know, this is a large edge for us, or at least for me in the markets, based on my studying this year, and the ability to make progress when this goes right is large. Yeah, so I think honestly throughout this entire structure that might be the main points. Again, we get this 23 EMA respect or 21-day respect, relative strength new high before price. We can zoom in here honestly and just look at the slope, which has just been absurd. And yeah, so let me pause here and then I'll pull up MarketSmith and we can keep going on the fundamental side. All right, we're back on MarketSmith here. Looks like right off the bat, obviously, we can just see massive sales numbers. It's one of the first things my eyes go towards when I pull up MarketSmith. This most recent quarter that they had the blowaway earnings, just absolutely absurd numbers on both sales and EPS. 1 quarter of EPS weirdness, 2nd quarter of EPS weirdness. That's not that worrisome, especially because we could see it picked right back up, 32, 39. So that's 4 quarters of increase. And if we look here, this is just absurd amount of EPS year-over-year growth. And then future estimates have, obviously that's not, 9% isn't huge, but it's been revised upwards, which is good to see as well. I didn't cover this in the price and volume analysis, but it's good to see that, you know, this matches our template of a smaller float, meaning the demand and supply characteristics that can come into the stock will move it one way or another really quickly. So again, when demand comes in and some fund wants to, or multiple funds want to own, you know, a large percentage of the float, they have to do this over a couple of days, because if they, you know, just open market, you know, want orders quickly, they're going to turn over the float, and demands or supply will be the main force coming into the name and driving it higher or lower. Moving on, again, the group, we have 3 over 197, monster, and then we also have 1 IBD flagship fund in the name. If we want to look at number of funds over a growth basis, 53 to 264, obviously insane growth there as well. So again, this, at least personally, is adding to conviction. It's not the sole reason, nor will it ever be the sole reason I get into a name. We have to be first and foremost having a risk-based mindset. So that means we have to interpret supply and demand in the ways in which we can manage our risk and make sure that if we're entering a stock, we know where we're getting out. and if things go wrong, we don't blow up our account. So last but not least, we can look at the IBT/IOF markets. If we want to start with the IOF, courtesy of TraderLion, we can see, there's just been, since this earnings, there's been a step up in amount of options traded. It makes sense because this, again, after an earnings event, you're going to see, funds either increasing or decreasing positions. Then if we look at the block market, there's a ton of stuff that came in this area, which is interesting to me because this is actually when the stock started to tighten up. So from this point on, we start seeing character change from these wide ranges. So again, seeing this only confirms the fact that we were saying, yes, there are institutions in this name because of how the price tightened up here. And we've seen some more block transactions on its run up, which again is going to make sense because of how much demand has been coming to the stock. Okay, like I said, I wanted to kind of switch up the style a little bit and give more of an interactive way for you guys to be able to see how I go through these charts. If you like this style more than the other, let me know and I can continue to, do this. If not, again, let me know. But all right, yes, thank you guys. Have a good one.